Only traders with a significant amount of starting capital can succeed long-term in the Forex market. Again, I'd say that, treat that as like the PA market, the retail market.
Well, before prop firms, very difficult to make any sort of significant money, with your own capital, unless you, well, again, it's all subjective based on what your expectations are. But yeah, if you want to make, 1-2K a month, you need to be trading 50K or above minimum.
It's a classic, isn't it, with Donald Trump, the millionaire that started off a billionaire. I mean, this is, a lot of these guys, they've got big capital, doesn't mean that they're necessarily growing it, and you'll hear about the winners within it. It's about utilising your capital sensibly, allocating it properly, not going all in. I mean, one of the biggest problems, I think, for people trying to make money in the Forex space is literally full porting straight away a position. Then you've got nowhere to go. And the chances of timing and getting it right, again, is what goes wrong. People are marooned. They then start not staying to their plan and running it out because they've gone too big and they can't handle taking that kind of loss.
Yeah.
So you can do it with small amounts of capital, but it's, again, your magic word, discipline, is what you need. Within that, you need to be able to react to the trade you're in and also set it up so that you can survive over a period of losses.
Yeah, and if you only have a personal account and it's 10K, you just got to manage your expectations. And again, like you said, trying to full port it or flip it.
And that leads you to my long hated use of the phone, where you know exactly what that number is and you're getting a margin call, and you can't hit stop. You've got to take that call, and you're going to be asked for some money. And if you've gone all in, then you're looking at having to take a loss on a trade that you never anticipated and you shouldn't be doing because it's just about to turn. So again, that's like the real money disappearing. The benefits of coming into prop world, and why, if you do it properly, you've got that advantages.
Yeah, it's massively changed the space. I mean, the opportunity out there is pretty incredible, And again, if you've just got that edge, that discipline.
Only needs to be a small edge.
Yeah, and you only need to take a handful of challenges to get that 100K account, 200K account, and from there you can make some significant money.
I mean, to be honest, I was hoping to be a question that would come out on this, and there may well still be, but it's like the way our industry's gone at the moment, the way that Alpha have reacted to the practices of the sharp few, and they take it on chin. We've got, as we say, 95% of people we've got obey the rules. I like how on the chat the mantra is becoming play by the rules, get paid. We almost need to create that as a strap line for Alpha, because that's showing we managed to eke out that 5 to 10% of bad element. That all they're doing is like the whole gambling thing. You wouldn't get away with that anywhere else. You wouldn't be allowed to have the size of positioning that you're doing in the real world without putting up some proper money. So I'm glad that is being taken out of the system.
Yeah. And if you're going in as a gambler, I think those sort of people, they're probably not in the best place in life. I don't know if they've got debt, they're not going well with their jobs. But if you're coming into this space where you think you're going to try and make a lot of money really quickly, then you're going to be humbled, pretty quickly as well.
I think ordinarily, like with anything, with betting as well, the worst thing you can do is win big. You want something that is sustainable, that you can eke out. There's very few professional gamblers that make money, but it isn't making 10, 20 grand a trade, and that's the same with doing this. You're being professional. You're setting up a repeatable process. That is what wins. Right, trading psychology is overrated. A good strategy will always outperform mental discipline. Over to you.
Yeah, I mean, like I was saying earlier, you can have the best strategy. I can sit here teach you my strategy. Somebody else can teach you another strategy. A rule-based strategy. You just have to follow this process. And if you haven't got that mental edge, you're not mentally strong, you're gonna fail really quickly.
And that, I have the same foibles and mental anguish now as I've always had, and it's so hard to overcome. The nature of a person is so difficult to strip out and make yourself disciplined enough to be a trader, which is again why you've got to make it systematic. When I do the risk reviews with people, I say, look, you literally have got to get yourself in a mindset that is agnostic to direction and agnostic to losing. What that means is you're happy to win or lose, and the amount of capital that you're going to lose isn't going to affect your viability or your mental strength. When you go in too big and you're living every kick, that is the problem. And then you overreact and you end up cutting stuff, or you end up staying in because I can't lose that, and then you end up going down and you move the stop loss, and then you're losing even more capital. And then if you don't cut it now, you're going to lose your account. What do you do? And
there's so many things against you. Like, so,
and yet you started off with the best trade going. You've done all the fundamentals, and it's going to be the winning trade. You've overstaked to start with. Your stop loss isn't commensurate. You should have just let it hit in the first instance, wait for it to come off, go again. But no, you've got to win. And I think, to me, of all the things that hurt people the most, it is that not wanting to lose. That is the worst psychology, and that is what hurts the majority of retail traders and a lot of professional traders as well. When it goes wrong, is losing that ability to just cut, start again.
Your stop loss should be somewhere where, if it's hit, your trade is invalidated. What a lot of people do is
looking for an excuse to make it good.
Yeah, exactly. They'll do some additional analysis, stick some more indicators up, and they're like, oh no, actually.
That's right. And serious point. I've said to people before: let it hit the stop loss, come back and reanalyze it. If it's still valid, then you should go again. Yeah. But if it's suddenly you thought that should never have happened in the first place, then by definition you're in a new ball game, aren't you? And then it might even be that you should be going the other way.
Yeah.
But again, that's why I say, and it's one of the reasons why I use the indicators that I do and the Elliott wave technical analysis, is that by definition you're always setting up alternatives. So it shouldn't be a shock when it changes to something else, which has often been people that have looked at it going, I expect it to win and I expect it to tell me what's going to happen. Well, nothing's going to tell you for sure. You're looking at the probabilities of 2 or 3 outcomes, and I'm already prepared for what's going to happen if that one's not valid. So that's why I like using that, because you've already done a lot of the next analysis up front.
Yeah, makes sense.
We're here all day. We're here all week.
Price action is the most reliable indicator for any Forex trader.
Yeah, I mean, fundamentally, and coming through the bond market, equity market, Forex was always the most pure trading. By definition, it's economics pure, and it is a lot of price action. There's very little else to like confuse it technically, or not any sexy fundamentals within how the pricing goes. It's literally one currency against another. So there is an argument for being a little bit more technical biased when you're looking at actual FX. But from my point of view, I think you've got to know what the fundamental background is of each economy, each interest rate, just to know, it's like, for instance, everyone's going to cut rates at the moment. The game is about who's going to cut them more. The Fed goes 50 this week. The Bank of England will definitely do another 25. If they go 25, the Bank of England might pause just because they don't want to.
Who's going to go first?
Yeah.
Who do you think is going to go first?
I think, Fed are definitely coming. It's whether 25, 50. I think what they really need to signal is that they're doing 100 over a period and that they're on top of it. Any loose language at all. The Bank of England are desperate to cut, but they don't want to get ahead of the Fed. They've already done a 25, so it's a moot point whether they can still stay ahead of them by doing another 25 this week.
Yeah.
But it's a euro, guys. I mean, be very careful about being a long euro person, because I think they played a very dangerous game last week that said they downgraded all their economies for 2 years, and yet they're not cutting rates. It's like, doesn't make sense. So there's a lot in the background. So to me, that changes my whole idea, which has been bullish on the euro, but all of a sudden there's that nagging doubt in the back of your mind here that at least level with the Fed, and if not, they might do more. So they might actually reverse the fundamental trend on how I look at the euro.
Yeah.
What do we got? Those socks are dazzling me. That's what it is. Risk management is more important than any specific trading strategy.
I think I'd agree with that. In trading, you need to maintain your capital. That's the number one rule. You can't trade if you don't have capital. So
this is it.
Risk management is definitely one of the most important factors. No matter what you're risking, 0.5%, 1%, as long as you're disciplined, it's baked into your rules, then I think that, for me personally, that's probably one of the core things you need to master very quickly. That as well as psychology, but I guess
I think that's one. I think they're one of the same. And I know someone's going to ask me a question later about what good advice have I had over my career, and what are the best bits of advice is literally buying time, the time value, the value of time in any process, particularly in financial trading and investing. So important. don't get yourself put into a corner where you've got to make detrimental cuts, basically, just because you've got too much at stake. It's literally, I can't say enough. And another thing, and I will, is when you're winning and something's going up, this is really counterintuitive to a lot of people, is that you should be selling a portion of what you've got, because that gives you a chance to react. When everybody's buying, you tend to get consolidations back. Nothing goes up in a straight line. And if you're the guy that has got the liquidity, just feeding that liquidity will get your overall position higher. And it's a funny thing. Why should I be selling something that's going up? Well, you should, not all of it, but you should be feeding the frenzy, and then you're there to be the ballast when it comes the other way. And that's how, the really good market makers over the years have traded.
Yeah, on a funded account, if you're risking a low amount, you should be able to maintain that funded account for a long period of time.
You literally, and what I mean by that buying time, it's literally that. You're staying in the game for when it's time to make hay, when it's good times. By definition, it's up and down. It's fairly random walk, even when you've got an edge, and you're waiting. You're trying to be in the game for the breakout days, and they don't come that often. It's more important to focus on one or two currency pairs than to diversify across multiple pairs.
Yeah, I think it's dependent on what time frame you're on. If you're trading off the 4-hour time frame and above, you probably need to have more assets in your watch list as opposed to somebody who's scalping or day trading. If I'm day trading or scalping, well, I don't scalp. If I'm day trading, I'll just focus on euro dollar, pound dollar, find the best setup. If I'm looking at more my swing trading strategy, you can be waiting days for your setup. Yeah.
I think it's like anything else, isn't it? It's jack of all trades argument. Are you actually focused on one, or is it diversification? What is true diversification? To me, it's tricky. I think I'm all a bit more for focus. The problem that a lot of people have got in this space, they think that they're diversifying. What you're actually doing is probably adding to your mix. And it's one of the things that I've always talked about. The reason I look at things from a fundamental point of view is I was taught UBS through derivatives is you break everything down into building blocks, because you might think that having one position on is totally opposite to another, when in fact you've doubled it up because you haven't understood what the driver is of the other one. I mean, for instance,
understand correlations, don't you?
Correlations. So the biggest one, everyone will have seen it of late. You either got beaten up or you didn't. August the 5th, and it's like risk-off event. Everything was going in the same direction, but there's one primary cause of that, and that was the interpretation of the carry trade being unwound, and that is literally the US dollar being sold and the Japanese yen being bought. Everything else for that 2 or 3 day trading period is the same trade, and you have to understand that. You could forget the fundamentals and not probably a lot of the technicals on a lot of other instruments until that carry trade driver disappeared. Then you're just adding fuel to the fire.
Yeah.
Nearly there. Support and resistance levels are arbitrary and don't hold real predictive power.
I mean, again, that's a bit subjective.
It's subjective. I think the key word there is they're arbitrary. Well, if they're support and resistance, they're not arbitrary, are they? Because by definition, they've been there for, and they've proven. But this is what I've always said. This is the difference between retail and institutional world. The support and resistance, as long as that order has sort of skin in the game, memory, it's all down to what that actual real money trader is doing and whoever it is that is the ultimate client. So it's only support and resistance until it's proven or not, which is why when they break, often that they reverse and resistance becomes support, etc. Because either that person's moved away and now everyone's gone, well, that's a fake level, but we know that there's liquidity. I'm going to sit there and pick the whole thing up.
Yeah.
The real power is waiting to see where the next level is relative to that.
Exactly. And as price, gravitates towards a support, you need to ask yourself, do I want to be a buyer or a seller here? But then again, as we were talking about earlier, you wait for additional confluences, indicators, candlestick patterns, and then you can start to understand whether this is a...
But you did a video on this, which is why I thought that's a good question, because I was saying earlier, you were doing it from a perspective of you're new to a game, what can I do to get myself a little bit of an edge to start with? And it's literally the support and resistance is to get you better than just randomly coming up and looking. But they're arbitrary in the context of reliability for predictive power. It's only your first confluence. I would say I'd never trade on support and resistance alone. I'm looking for 2 or 3 other things to line up with it.
Yeah, exactly.
So that finishes the bowl. The bowl is empty, but obviously it is the goldfish bowl, and it's going to go round and round every day, and that's what we're here for, and what you love so much. I hope you've enjoyed those ideas from Pep and myself. And if you've got any questions, come on to us, direct to Alpha on the Discord, or leave a question below on the video, and we'll get back to you.